Good day, all. Ira Epstein, and we're going to do your financial market wrap-up, but this wrap-up's going to be for the weekly charts, even though it is Monday. You know, it's June 10th, 2022, and I decided to just go with it this way. Now, my voice is coming back. It is definitely not back. I cough a lot. I want to thank everybody out there that wrote me. I had a terrible case of COVID, got put down exceptionally hard. Did not have to go to the hospital. Definitely caught forms of pneumonia, if you will. They treated that. That's pretty well gone from what I've got. I'm left with the cough, and they told me that'll be with me for a while. And weakness. Okay, but I'm here. And I'm getting back into the market. So this extra day certainly helped. So we were open today. In fact, we are open right now. These are live quotes. The market, as you know, has holiday hours, so it did that. But let's go to the charts, because that's really where I want us to be, and take a look at what we've got. When you look at a monthly chart, you're under the 18-month moving average of closes, and you've come down very hard. You've gone from 47.58 to 37.13. Any way you want to cut it, you're roughly down 1,000 points. It's a monster break any way you go about it. When you look at the weekly charts, you've come from these highs all the way down very hard. I don't know where the support is on this chart, but on a weekly area chart of closing, the bias is still to the downside. Now we get to the weekly bar, and you can see how the market's falling down with you. And when you put the swing line study on, I wrote that study years ago because it makes it easy to look and see is the market in a trend. A trend being lower highs, lower lows for a downtrend, and you most certainly are. Where the moving averages. You have the 18-week average, probably going to crisscross under the 100 sooner rather than later. In the next 2 weeks or so wouldn't surprise me. But there is something on this chart that I want to stop at and point out. Markets like to go to major moving averages and try to hold them. I'm going to stick my neck out. I think 35.06 is a form of a bottom that can form in this market. Not saying a turn and back into a bull trend. That is not what I'm saying. I am saying that's an important area, and I think it's going to get a very lot of attention from the professional traders. The market's been riding the Bollinger Band down. I don't know that it'll get there right now. To get there, you got to understand it's another 200-point break. That's not going to be easy. But as a target, oh yeah. And momentum is still down. So let's assume it doesn't want to go there now. Where might this market go? It might be headed back to the 100-week, which is 40.92. Now from here, that's really a pretty big rally. That's almost 380 points or so. That seems a bit strange to me that it would get there 1, 2, 3. So I can see noise happening in market. That's what I'm looking for right now. What about the industrials, the Dow? Momentum down, trend clearly down. Again, riding that lower Bollinger Band, if you will. I think that this area is going to be an important zone, the 29,300. Now, if you went in and you looked at some of these and you look at the PEs, you're down to zones where in the math, these lower 200-day averages also fit in. I saw a lot of talk about that while I had COVID, is to different traders thinking that might be the first stopping spot for the market. Nobody that I know is sticking their neck out and saying that's it. I can't say that either. But I can say between here and there on each one of these charts, impressive, yes. I think you're going to get big-time short covering if you're not already going to get some. Notice how your momentum's still down here, market falling apart on you. Okay, you can still keep going down in this market into that. All in a downtrend, all approaching key support at 200-week moving averages of closes. There is one that is under it, so it doesn't have anything there, and that's your Russell. The Russell has no moving average under it to work with. This is now the worst looking of all the charts because it doesn't have that under it. On the way up, the first resistance would be the 200-week average. Let's call that the 1775.5 zone. And above that, the 18-week. So I have arguments that on the way up, if you get a rally, the market is still short sales. It's on the break that you get down in the other three indices that I'd have my doubts about what you want to do with it. I wouldn't want to press beyond the 200-week is what I'm saying. In the 30-year bond, I still am in the bear camp. The momentum in the market is still bearish. The trend is down. I think this gets aggressively sold on all rallies. So I'd be looking for this market. You get a good rally in here. If those of you that take my morning subscriber video, you know, we have a moving average we look at. I'll be looking at that real hard. There's another average. I don't show you everything in these free videos. On the 10-year notes, no trend. Yes, we can all see we're in a bear market. Doesn't take a genius to see that one. But you don't have the swing line with lower highs, lower lows, which tells me a rally, if it comes, will probably set that up and still look for even lower parts. Why? Because I don't think for 1 second the marketplace thinks that we're through raising interest rates. Not for 1 second. I think you have to get through the July rate hike now, and then we can talk, is the September, did we see enough to do damage, and the Fed can pull back from 75 basis point hikes to maybe 50, maybe even a quarter down the road. Don't know. But right now, I'm looking on rallies to be aggressively sold. And in the dollar index, you have an embedded reading. This is still very bullish. Pullbacks in this market, I think, will get bought by the trade. I think they'll look into here to be the buying zone and still targeting above you. Now, in the euro, you're starting to get a bounce. You have a market that momentum is sort of flattened out. You're not trending, so that's why I can make the argument for a bounce. Now, that's the strange part. If the dollar is going to be good, does the dollar have to be good here, or can the dollar be good at a lower level? I think it's at the lower level. Because in this market, you have right now a lower low, higher high, and flat momentum. I don't see anything exciting there. The Canadian dollar, if you were sitting next to me, you'd get the elbow in the side. Why would I do that? I didn't mean to hit that. Because you're at the 200-week average in the Bollinger Band. Smart money covers at big numbers. Those are big numbers. That's where the short covering is going to come in. The resistance, in my opinion, is going to be 78.52 to 78.70, the combination of the 100-day average in green and the red being the 18-week average of closes. Japanese yen, you have an embedded reading. That tells me on a good hard rally, which the market's got to give us if we're going to try to play the short side, at least that's what I'll tell my subscribers, you need something up here. Selling the market down here is a little difficult. There's a key moving average I'll watch, but I do think this market, as long as that's in place, you want to get short this market. I still think there's more left here. Then we get to Bitcoin, and Bitcoin got down today, as you can see, to 19,600 for the week. Now, in the cash market over the weekend, you cracked the 18,000 level. You're also under the 200-week average in the Bollinger Band. Now, I can make an argument this could be where you get a bounce in the market from. I am not saying this decline is over. I am saying there's reasons here to look for a technical bounce and no more than that. Then we get to the Brent WTI. Well, we have seen the differential swing all over the board. From 675 over back at the end of April, May, to 68 cents under, and now back to neutral here at 347. When we look at the rally, I kept saying that I thought the pros would take money against the upper Bollinger Band. I think they did. You have not ended this uptrend. Look for the market to consolidate, I think, against the 112 area if it can. It would be in a problem if you took out 193, but that's $14 away. I'm not expecting that. When I look at the WTI crude, you've stepped out of the uptrend. You have a higher high, lower low. The battleground right here at the 18-week average. Momentum flat. I make an argument for neutrality. We then get to the Rebob gasoline. Why is this getting no press? That in the futures you've gone from 432 into the 380s, 370s, and that's a big break, and you're going to see that show up at the gas pump. You know, it doesn't go penny for penny, but you're going to see quite a bit of that come in. You lost the embedded reading. I could still make an argument here for the 357.5 zone before it finishes up. So you put it all together, you try to come up with game plans, and that is the name of the game. And one of my favorite tools for that happens to be right here in the pivot point. So when you look at the markets intraday, one of the fun things you can look at is, and I'm sure you have this technique in your charting software if it's sophisticated, it's called pivot points. You probably don't know how to use it. But basically what the market does is you're looking for a neutral zone in the market, such as this white line. The red lines are sell numbers. The blue are the buy numbers. It's a day trade tool. It's not for position trading, hitting the market, but why can't you use it intraday? Exit and entry as well. Trying to get yourself, if you got a position on, in or out of that position. I tie it together and I put it with my stochastics, and I think it gives you an edge in terms of timing. So how do you get all this? Well, it's simple. You go to our website and under free offers, or just come right up here, follow my finger, put your cursor at the top. You'll see an icon appear. When that icon appears, my voice going now, when the icon appears, give it a click. It'll take you into the free offer area. I'm Ira Epstein. It's nice to be back. I'll see you tomorrow.